Thursday to everybody. For those of you who are joining us for the first time, welcome. And just so you know, we are doing this every market morning, going through one of the insights generated by Toggle Copilot, looking particularly at some of the drivers it had identified and the direction in which it might push specific stocks. So if you'd like to see more of these, definitely subscribe to our YouTube channel or check us out on toggle.global, where you can actually also drive yourself the Toggle Copilot. It's free. The focus today is going to be on Red Electrica. It's a company that some of you will be familiar with. It's actually in the utility sector. And recently it's had a bit of a rough time, in part because what we have seen is rates rising, and that's usually not good for the utility sector because it's seen as a little bit more staid and income generating, but not as exciting as some of the growth stocks that typically graze the covers of financial magazines. The asset overview, which is the page that you can always look up in Toggle, shows you the kind of steadily increasing upside pressures that Toggle has identified. And actually the most recent one, which is the one currently with 10-day MACD, is what we'll take a look at. And so clicking on this right here will basically show you what the body of the analysis is that Toggle has produced. In this case, the median projection is that the stock could rise almost 13% within the following 6 months. Could be much sooner than that, but that's the sort of a typical horizon. And the starting point is at 1450, rising all the way to 1634. So undoing most of the recent sell-off. Toggle analyzed 11 similar occasions in the past in order to produce this median projection along with the confidence interval. Now, as always, whilst this is the median target, the red line here suggests that if the price action were to not follow this and were to drop substantially below the red line, that indicates that the odds of this still being the right driver and that this pressure still being valid have reduced significantly, and so it's time to get out of the position, or at a minimum reevaluate. Now, clicking on why it might move will show you immediately the other periods when you've had this 10-day MACD below the level that currently Toggle is identifying as potentially the sign that the stock price is ready to snap back. And if you actually look at these other occasions where we've had, just visually inspecting these other occasions where the MACD has been this stretched, they do seem to coincide with a pretty nice comeback, bounce back in the stock price. So again, something to take a look at, see how it fits with your fundamental view, both of the macro environment, rates, and the utility sector as a whole, and see whether or not this is one of those positions that might be worth for a trade. Look at the backtest. Again, you can also see that the actual returns from the past episodes have been overwhelmingly positive. Some cases just around the target, around 10%, some cases actually as high as 15%, and that a dollar invested in this, every single one of these insights in the past, would have generated about 2.2, almost $2.4. So again, over the 11 episodes, it's quite a decent return, and definitely something worth paying attention to. The insight also has 7 stars because it is quite a compelling frequency with which we've observed this pattern. So much for Red Electrica in the daily brief, which should be in your mailboxes already. Otherwise, sign up on toggle.global and you can receive it for free. We also talk about yesterday's Fed meeting, the Powell message, and what that might mean for the equity market. Thank you for your attention, and we'll see you again on Friday.